The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following took place between 2 p.m. and 3 p.m.
So what do we have today? Well, we're off 7 points on the S&P cash. On Wednesday, I said that one of the things you needed to watch out for, and I actually wrote down the S&P level, and it was 2159. So I'm going to take a little victory circle around here.
I informed you thusly.
And that is massive volume ends up being an exhaustion move most of the time. That doesn't mean that that everything goes nowhere. It just doesn't go very far. And I'm going to say that any move, I think I said in the newsletter, less than 1% up or down for several days. Volume is 3.3 billion shares as we come in. So this is yet another day. What we're looking for is the volume to start coming down, a little bit of sideways action, and then we're probably going to get some movement again. That could take us into next Wednesday. So we can look at that. Of course, other big news out here, we had Andy Heck make a big call on gold going short, and he looks like he cleaned up. We were talking about it before he made the call, I think on Wednesday. I think I was talking to him on Wednesday, and we were talking about the dollar, and that is an adjunct to what was going to happen in gold. I hadn't been looking at gold that closely. I'd been looking at a lot of the other positions I had on. But I had doubt that at least the dollar index was going to go hit 100 again. And we're probably going to see 3-4 rate hikes next year. Very tough to see how gold continue to go higher through that. Also, the bond market just fell out of bed. The bond market, of course, is closed today for Veterans Day. And there's not much else you can say. But a lot of people thinking that it was going to be a big move before the end of the day today. Besides the giant volume, bond markets closed. Generally, the volatility is less than half on average. So if you're thinking you're going to get big moves on a day that the bond market is closed, you're probably barking up the wrong tree. You may get a lot of fluctuations intraday, but on the downside, what are we, 0.3% here. That's about all you can look at. There are going to be some fairly small moves in the market. I'm not looking for any 30 or 50 points before the end of the day or even into next week. Generally, these volumes need to start coming back down. Everybody is fighting on the left and right side. I'm taking the Mr. Miyagi pledge out here. Best way to avoid fight, not be there. I'm going to wait until everybody's done and totally worn out from beating themselves senseless in this market and wait for the next wave to take me to the palace. Anyway, as we said, 3.3 billion shares today, so volume still way, way, way high, making me think that we still have a few more days of sideways action until everything kind of calms down and then we can actually get a move. Unclear what that move is going to be. As I said, at least for the standard equities, I am more than willing to stand back, get a little rest, get a lot of stuff that I needed to get done, some book work, some more programming. I really treasure these days that I don't have any axe to grind in the market and that my calls, at least to me, seem logical and fair. You can give me a call today at 877-927-6648. You can email me at path@tfnn.com. And I don't know what else you can say about it other than that. Give me a call. It's going to be a nice day to do it. and we will continue and soldier on.
That it's all just a little bit of history repeating.
On this day in 1918, at the 11th hour, on the 11th day of the 11th month of 1918, the Great War ends at 5 a.m. that morning. Germany, bereft of manpower. Is that how you spell it? I haven't used bereft in a long time. I'm going to have to use that word several times. In fact, the word of the day is bereft of manpower and supplies, faced with imminent invasion, signed an armistice agreement with the Allies in a railroad car outside Champagne, France. The World War II left 9 million soldiers dead, 21 million wounded, and just about everybody losing a million or more lives. In addition, at least 5 million civilians died from disease, starvation, and exposure. Growing up in Kansas City, the memorial for all the U.S. soldiers for World War I is right across from the main railroad station downtown. What a beautiful railroad station it was, left to decay these days. But, man, what a beautiful place that was. Anyway, went to the memorial several times via bus trips from the schools to go down there. And I remember that one mostly because on the same day we went there, we went right over to the Kansas City Fed. I went in, and they gave me $1 million to hold in my arms and then throw in a giant hole where they were burning the used dollars then. But I had $1 million. I guess I was 13. $1 million in my arms when I was 13 years old. And unfortunately, I had to throw it all in there and burn it. That's one of those wonderful days where you're both happy and sad. Well, I had $1 million for a minute, and I burned it all up. But that was my first trip into the Kansas City Fed, and not my last. Actually on business several times. What else do we have going on out here? Well, of course, it is Veterans Day, and I have to say that, we talked a little bit about the Marines yesterday, but if there's probably a better bunch of sound clips for veterans out there, I don't know it, than from this Band of Brothers miniseries that ran on from Spielberg and Tom Hanks. But great interviews, and here's one of them from Captain Winters, if you remember that, if you saw the series.
Henry V was talking to his men. He said, "From this day to the ending of the world, we in it shall be remembered. We lucky few, we band of brothers. For he who today sheds his blood with me shall be my brother."
Great miniseries if you get a chance to see it. I think it's on Netflix and on Amazon both. What else do we have going on out here? Netflix is rather weak. I had some emails about that. We will talk about it when we come back. Got plenty of time to email me, David White, or actually Path at TFNN.com, and call me at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I had a question out here why I thought Netflix was so weak over the last few days. And for a great deal of it, it is that they look at Netflix as throwing money away. They threw a huge wad at what's his name? Now I've got a mental blank. Woody Allen. And he made a series, and halfway through it, he thought it stunk, and it kind of came and it went. I tried to watch it, almost unwatchable. So, they've got some other big contracts like this that haven't turned into much of anything. There's a few, trying to remember the Saturday Night Live guy that sang about the turkey and all the other stuff. His movies were never really that great, although he made a couple of decent flicks. But he signed a contract and has laid a bunch of eggs out there. Maybe somebody can tell me, what's that goofy guy from Saturday Night Live? Always does the movies with the exact same cast, exact same friends, David Spade, and I'm just having a mental blank now. Someone will bring it up. Anyway, Netflix looks like it's going to hurl a bunch of cash at Robert De Niro. And De Niro has made a line of incredible, huge box office bombs over the last 2 years. And people are starting to think that maybe Netflix has lost its juju out here. And trying to remember what it is. What is that? I'm trying to remember. David Spade. What's his name? He's in all the movies. I can't think of it. No, not Alec Baldwin. He's Goof. He always sang about My Turkey and goofy songs and Hanukkah and a bunch of other stuff. And then he made a ton of movies with David Spade and some other guy from Saturday Night Live. And he's kind of the ringleader. All the movies are the same thing. I'm going to drive it. It's going to drive me mad. Anyway, for Netflix, just one more bridge too far with them throwing money at De Niro after him making a line of stinker movies. And people are thinking, well, they're just kind of scratching their head out here. Netflix actually one of the companies that hadn't threatened the president-elect at one time or the other in the last 9 months, but steps in it just the same. Yes, that's who it is. Not Sanders. And, Adam Sandler. And, man, he made some really good movies, about 2. And he's made about 15 just horrible ones. A couple of acceptable ones. But people would watch them anyway. And the thought was that even if he makes a ton of stinkers, it won't matter. But it has. So he's still got a big contract. And that is, Netflix makes these long contracts when they probably should be doing them one at a time and not just throwing a wad of cash out, because even Woody Allen said the same thing. He said, eventually they just offered me so much I did it anyway. And I suspect that may be the same thing that's happening with Robert De Niro. You can't tell. I mean, he's made some good movies in the past. Now I think maybe he's taken one too many shots to the head in those boxing movies he's made. But they haven't been any good in I think 9 or 10 of the last movies made. One made money. So it's not one of these things where he's a bankable kind of guy anymore. Same thing with Sandler. A lot of these guys are just running out of ideas and not doing a whole lot for us out there. What else we have going on out here? No merger for you. Had a question if I would go through as many of the tech stocks as I could today. We will later and take both a fundamental, political, and technical look at these things. But I think Andy Heck either called in or emailed me about what my thoughts were about the AT&T deal for Time Warner and Comcast breakups from NBC Universal. And, I mean, I think Trump has made it more than plain that there's no way in hell that this AT&T deal is going through. First of all, it was stupid. Second of all, he said it's not going through. So I think maybe we can look at that. The Monsanto deal, probably not going to go very far. He's going to be fairly restrictive on everybody breaking up a lot of these companies and or acquiring others. There's going to have to really be a fairly decent reason to do so. And almost all these deals have nothing to do but financial engineering, which he's kind of not thinking too highly of out there. So there's a little political stuff going on out here. And I think that's about it for news. It's been kind of a quiet day on a Veterans Day, and wanted to look at a few of them. Don't think I brought up Facebook yet, although Mark Zuckerberg's under fire a great deal for especially the last few days of what has gone on in Facebook. If you're unfamiliar, there have been some very enterprising people in some of the Baltic countries. In fact, there were about 100 websites linked to Facebook that were all from one small town in the Maldives. These guys have been cranking out incredibly funny, but we'll just call it clickbait, right? News stories posing as news stories and raking in the cash from Google AdSense. Most of these things were rather far out there tales of Hillary going to jail immediately. And so he's kind of facing a big deal about that. But you have to give props to the people in the Maldives, where there's probably not a lot of opportunity to make money. A few phony websites and easily finding the weaknesses in Facebook continue to have me and others call Facebook fakebook about what you have to do. We talked about, I think it was probably in July, that I was calling for peak social. Went a little bit farther out here. I still suspect that they have some fairly significant problems, much like Yelp did. No one really wanted to talk about the elephant inside the room, and that is really knowing what is and what isn't a real article and what else is there. Of course, Facebook and Zuckerberg himself never did that with, or never really helped it with having a lot of political bias. He also, why not from his own side, other side, took a huge amount of flack from hiding the news story. What was it? It was the first time Comey came out, not the second time Comey came out. But the first time, they hid that news all the way into Sunday and kept it off the news feed. Most people were crying foul. This is just kind of laziness and some other issues that just show that how easy it is in these big companies for things to come through the cracks. Getting some flack from some other people, too. Basically coming down on people that they shouldn't and letting people through that they shouldn't. So continues to be a big issue. I think this thing's coming back further. We'll talk more about this on the other side. Give me a call, 877-927-6648. We'll go to Don in Virginia when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're going to go to Don in Virginia. How you doing today?
Hey, hi, Dave. It's a pleasure to speak with you. I listen to you frequently and value your opinion. And I was just kind of taking a little back there. I think I heard you say you're thinking of there could be multiple rate hikes coming next year.
Yep.
I mean, the economy, both U.S. and worldwide, is so sluggish, and we've been hearing about rate hikes for decades now, and they never really materialize. I mean, what prompts you to think this way?
Several things. I got an echo here for some reason I'm unaware of. Anyway, what I'm looking at is one of two things, but it are actually two things. One, Janet Yellen has artificially kept these rates down. She should have started raising them a year ago.
Great.
What we are now seeing is that she's a lame duck. She's got one more year on her ticket, and that's it. But that part of her that was able to maybe carry yet another thing probably kept a few people in line. There are at least 4 or 5 dissenters on the team, plus Trump is going to add one more. In his discussions, when he's had ones that are serious, Trump has basically talked about his love for Paul Volcker in 1980, where he knew that he needed to get the worst parts of the economy fixed, and he was willing to spend the first year or two of Reagan's administration to do so, to have the next 6 years of a bounce. And I think that is what we're looking at. We need to really work out, or at least this is my thought. The Fed knows that there's giant bubbles out here in the market. Those bubbles are caused by the unintended consequences of low rates for far too long.
Right.
There's also a chance that if we do go into a recession, we have absolutely no bullets left to fire. So the idea right now is to try to get rid of the worst, even though it means the economy is probably going to come back a little bit, get rid of the worst of the issues and try to get ready for a push into the elections, midterms, and then after that. So politically, it is part of it, but I think a great deal of it is that the hawks on the Fed don't have to worry about Janet Yellen for very much more. She's a lame duck. The comments made even after the election make it pretty sure that why he's not going to try to fire her, although I don't know if he could or at all. He's certainly not going to have her re-up at the end of that year. So I think there's a clear message that the hawks can dissent and push for more. But just a handful of them that have been around and talking, they're all saying the same thing, which is they want at least 1% more into next year to give them at least a little bit of wind beneath their wings, lest everything comes down, so they could pull it back.
Mm-hmm. Well, we'll see. I mean, like I said, we've heard this talk for so long, and
yeah, we have, but I think you see it in both the dollar index, and I think we see it in the gold market today.
Oh, yeah, I mean, there's no doubt that so many bubbles. But what about remember? I believe Yellen backed off. I don't know, a few months ago, whenever they were supposed to raise rates, and she used the Europe as an example. Wouldn't it hurt the euro a lot if, I mean, at this point, if we would raise rates? I mean, it's already so weak. I mean,
if you listen to them, they're the same people telling you the economy's going to the moon. They're saying we've got 2% or 3% growth every year. I don't believe it, but that's what they're telling you, right? So
yeah, well, that's puny. I mean, 2% is. I mean,
it's tiny. But again, we had no growth back in 1980. I don't know if it's going to work. I'm going to tell you that I think that's the mindset, though, that the current administration and many people in the Fed think, and that is that we need to get rid of this stuff very quickly. We're sitting on TNT and dynamite, and it's sweat and nitroglycerin on the outside. We need at least some way to get some reserve fuel in the tanks out here in case anything does bad happen. And we need to get rid of the bubbles fairly quickly too, so if it does pull back, we don't blow up. I think a lot of people see that. I do. I mean, we've seen a 1/4 point raise in the interest rates on houses in just a week. My guess is that we're a point and a half higher in a year from now.
I mean, that would really kill the housing industry.
At what point is 1.5% higher? That's, what is it? What percentile over the history has that interest rate, 4.5%, been over the last 100 years? Would that be like 2% of the time, 1% of the time? Even at 4.5%, how low is that historically?
Yeah, historically, but today, the jobs, are so bad. I mean, they're not good jobs. So people, first-time home buyers are out there, and they're not making much money.
Well, I will give you what I think Trump would say.
Yeah.
That is, we're going to get rid of the Obamacare. So everybody's not going to have, 3 jobs. They're going to have one 40-hour job because it's not going to be required to throw all the money at the Obamacare stuff. I know 3 people that are working at 3 different places just because they have to avoid getting anywhere close to that total hour limit. So I think that there's going to be some better jobs out there with 40-hour work weeks and give people a little bit better pay once that's taken care of. That's going to be taken care of probably by February. I think that's the first thing they plan to do. So they're going to get rid of that, put it back in. They're probably going to be less people working 3 different jobs and driving back and forth, and we'll have one good job with a 40-hour work week instead of a couple of 3 or 4. And at least that's what they're going to say. But I understand the whole idea that we can't do anything. But my guess is that Trump is going to – everything he's done out there, from wearing the hat, make America great again, looks like he's running the exact same playbook from 1980. So maybe that changes, but my guess is that everything he said up to this point, when it's been serious, not just to bait people or troll them out there, has been kind of this idea that, we need to get back to it. Interest rates will be a little higher. But okay, it's going to get rid of the worst of the problems that we had in 2008 before they developed. And, so what? In fact, I think the UK is actually, the Prime Minister is coming over here in a week or 2 to talk to Trump. My guess is they're going to try to put together some kind of trade agreement to maybe try to keep them out of the EU, or at least shore them up a bit. So I have a feeling that a lot of the end of the world stuff for Brit exit is way overbaked too. We'll be back in a minute. If you want to hang on, we can still talk.
Oh, thanks, Dave.
Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
From Virginia. Still there? Well, guess not.
Still here. Dave?
Oh, okay, there you are. They're just slow on the uptake in the engineering department today.
Okay.
Anyway, I guess that a lot of people are thinking, okay, all the homes quit being built, and therefore everybody's out of business. And there's several of these moving pieces. I suspect, at least the plan is to put these all together. One of the other ones is, of course, that he wants to repatriate all this money from companies like Apple that have $200 billion overseas and tax it at 15%. The thought is that as less and less houses get built, that a great deal of building and other that kind of endeavor is going to be more about the government building new roads, fixing the roads, fixing the bridges, doing all that other stuff. And his idea is that he's going to take all this cash coming back, which is, I don't know. I think I saw something that said just the cash that our top 50 companies have overseas is bigger than the fifth biggest economy. It's something like that.
Yeah,
I mean, it's a lot. And he's going to take that every year over several years. But my guess is that's going to slowly fade back in to the economy, and a lot of it's going to be a lot of bridges and other things. I don't think there's going to be that many new roads, but I do suspect that he's looking at building a lot of big statues, kind of like the Egyptians out there. I think he kind of likes the idea of maybe building some giant pyramids as an homage to him. So there may be a little bit of that going on too.
Yeah,
so he's never been accused of not having any ego. So there may be a little bit of that. But I think that there are going to be a lot of these big projects going on.
Okay.
So that is, from everything I've read in the background, which isn't, you're not going to find this stuff on 24/7 cable television. You really had to read some of these deep articles to really figure out what he was thinking about, because they never would spend 30 minutes explaining it on even on Fox or anything. They just, he's doing this and it's nuts, right? They're pretty. He's not a dumb guy. You may not agree with him, but he's not a dummy. No. He's had a pretty good master plan, and he was able to whomp everybody with a Twitter account. So I'm not going to underestimate him, and certainly if you don't like him, you shouldn't underestimate him as your opponent. They've done so at their peril already.
Yeah, the thing is, Dave, like Obama tried the same thing, remember, with the shovel-ready jobs and everything, but that never really.
But none of those jobs were shovel-ready, and all the money went to unions.
Yeah.
And built nothing.
Maybe he'll handle it better. Maybe.
Maybe it'll actually be a job. Yeah, I think there's lots of stuff they could start on fairly quickly. But that whole shovel-ready thing, I think if I remember right, there was $700 billion, and 70% of it went to the unions just to pay everybody off to sit around for a few years. Mm-hmm. So it had very little of nothing to do with actually making anybody any jobs.
Right.
So I'm not going to. Huh?
They didn't need, the plan for the permits and everything. All that stuff takes time.
But if you want to get it through, you can get it through.
Yeah, like I said, maybe he'll be better being a businessman and everything. Maybe he'll know how to get
If he could get it done in New York City, I think he can get it done everywhere else. I'm sure they've got more regulations than Carter has pills.
And I'm going to ask you, too, what do you think about, do you think Italy's going to leave the EU like next week? They're supposed to have a referendum.
Oh, I don't know how they stay in there. It's been one of these things where if it was a real Shylock, everybody over there would have their arms and legs broken. I'm going to pay you next week, and it never comes, right? Mm-hmm. So the question is, if they say no, what's the EU going to do? Give them yet another week?
Mm-hmm.
See, I mean, that's all they've ever done, right, is kick the can?
Yeah.
So if they say they're going to leave, what's going to happen? Do they think that the EU is just going to come back and beg for them to stay again? They probably will. They just, when you bargain from that weak of position and you continually reinforce the fact that you can do nothing and stick around like Greece and Italy, what do? They just kick. No one's willing to actually act. It's easier just to kick the can down the road. So they'll talk about it and mull about it. There's a lot of fiddling why Rome burns over there. Hey, you like that one? I worked it in.
Yeah. Well, so how do you think all this is going to, with the interest rate thing and everything, how do you think it's going to affect, and that's hard to say, forecast, but
1% is really not that big a deal.
You don't think it's going to roil the markets? I mean, initially, I guess it will, but
I think you've already seen it. I talked about the TLT making the biggest thing. It blew away even what I thought was going to be a low out here. I thought maybe this thing would find a low about 127, and it blew through them all, which makes me suspect that we're going to blow through the rest of them. There's a gap down here at 119 that looks like the next target now.
Yeah, I thought it was overblown, but maybe too, like it's all built in. Maybe they're looking down the road and.
I think that they've now figured it's all built in. But I mean, the way this thing came off with the election is telling you that this isn't a bunch of dummies. These are some pretty smart cookies in the bond market out here. They're not day traders, right? They have to get in and take out. So if they've dropped this thing as hard as they've had, they're pretty sure that things are going up, not down. So let's get into your argument. Let's say that there's only 2 rate hikes next year. How different is that from having a whole 1% higher? Is it really that different? I don't think it is. I think once you get one and you get yet another, then I think 2 more is probably just more of the same. The market probably gets pretty situated. Will you have some bad times? I think you will. But, everybody has got so much money sloshing around. And, you got some people with some big bank accounts. Carl Icahn, I don't know if you caught this. Carl Icahn was at the Trump celebration rally. He was going to be a big fixture there. Yeah. About 10:30, you know what he did? Did you hear this?
No.
He took off, left the party, said adios, and started running back, got all his people in the office, and at 2 o'clock in the morning, he was back down there buying everything he could. He was up all night. So there's so much money out there floating around that's it. But yeah, I heard he basically, I think he was on, it must have been on Bloomberg, and they asked him what he did. He said, I kicked the party because there was so much money to be made. He said it was, by the time I got to my office, it was down Dow was down 700. I said, you said I was in there buying both hands. So what can you say?
All right.
I think the market's going to pull back. We'll talk more about that in a little bit, but we'll be back in a minute.
Okay. Thanks, Dave.
Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Anyway, we're back. I had a couple of emails here about gold. Asking me to say that again. And when I was talking to Andy, I think it had to be Wednesday. We were talking about the Paul Volcker thing and he was trying to work some stuff out. And sometimes I try to work out stuff with him as a sounding board. And his basic call was, what happens with gold? And I said, if gold goes below 1240, then you get 1180. And, you're back into this gap now. Can it go sideways, at least on the GLD around 115? The answer is yes. But we're down in here. Volume's going to be huge by the end of the day. And that opens up a few more gaps down below. A lot of people on the wrong side of this one. It would not be surprised. I mean, what had? What was it? 1330 after hours on gold. So we're off $100 already. Gold is very good at this, and you could almost make a case. This puts gold on the track back to $1,000. So I suspect that is telling us that we are going to at least have a very strong dollar. And the opposite side is a little higher interest rates out here for inflation, which there's not much of. There is some, but not much of. So I will take the opposite side of the fence of most people out here. I think Andy was looking at it a little harder than I was. I wasn't thinking that much about it. I'm looking for more long-term plays in the technology side. So we'll continue that. Oh, Andy's on the line. Hi, Andy. Are you there?
I'm here. Oh, hello.
Hello. There you go.
Hi. How are you? Yeah, I just wanted to add, when we were speaking, and thank you for helping me clarify my thoughts the other day, you know, when we got this Trump victory, and Dave and I were talking all through the night as the election returns came in, one of the things that stuck in my head was, you know, the similarities to the 1980 election, what gold actually did after Reagan was elected, the fact that, you know, I thought that the dollar would go up eventually with Trump. I thought that interest rates would go up, and that is not good for gold. So I put out a sell recommendation to my subscribers on the Technimental Commodity Report on Wednesday, and bought a bearish instrument, and I think it has a lot lower to go here.
Very good call.
Thank you.
Were you looking at anything else like the commitment of traders? Just seemed like a lot of people were probably on the wrong side of the market, and after taking it to whatever it was, 1330,
I thought
in the middle of that night, back
election
down to
night
$100.
was very ugly, and I just, you know, it's just kind of a gut call here. But I think, you know, the big level here, 1215, the 50% retracement level of the move from the lows up to this year's highs, and we go through that, could get really ugly here for gold. And the uncertainty is kind of out of the market now.
One of the things that I guess a lot of people haven't talked about or even thought about is probably a lot of contracts that could certainly see the margin evaporate to zero and have forced selling even more when we come back on Monday.
Right. I agree with that. I mean, today is a watershed day for gold. It's kind of giving it up. We haven't seen this price since early in the year. And if we can pierce 1,200, you know, it could get pretty ugly pretty quickly. I also, you know, I was kind of perplexed yesterday because silver was hanging in there, but silver's really giving it up today.
Yeah, and everybody's got their money out of the treasuries and bonds and trying to shove it into the equity market. We may see something like this follow in the equity market soon, but we'll have to take a look at that next week. Thanks, Andy, for the phone call.
Thanks,
in the
Dave.
meantime, sell when you can, not when you have to, and we'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.